income replacement, but you also can use life insurance for protecting your wealth and growing your wealth and leveraging it. Let me explain.
Hey, actor, what do you know about wealth building? Today, we're talking to Shakey Webster, aka Auntie Shakey. She's going to give us the tea on what we need to know in order to build our wealth. I'm Lydia Nicole, and this is Acting Smarter Now. What common financial mistakes do you see actors making that mess them up, and what should they do to avoid it?
The common mistake that I see actors making all the time is not having a budget. It's really that. I say it all the time, and I know this because I was there, where, here you are, I call it future tripping, where you expecting money to come in that doesn't actually show up. You know what I'm saying? Like, you're hoping that you're going to have this, you're either going to land this deal or this act or something like that. So you end up spending more money than you actually have. That's the biggest common mistake, is just spending money that they don't have. And, I understand because, we're in the industry of really believing, really hoping that things and thinking positive, right? But unfortunately, you can't spend money that way. I don't want you to spend money you don't have.
I know that from a personal experience because I went into incredible debt in my late 20s thinking, well, I have the credit cards. It's going to be all right till the next job comes. But if the next job doesn't come within that 2 month period or however little stretch of time you have, now you are in crisis mode. And then they start calling you and then they start badgering you. What are some things that actors can do that they can leverage their skills to create additional income streams while they're waiting for those acting jobs to come in?
Oh, that is such a great question. That is such a great question. So, which is the reason why, well, one of the reasons why I'm so good at the position I'm in right now. So, I am in the financial service space, okay? And I have my own agency within this space. This industry was perfect for me because I tell people all the time, sales, you have to act in sales because sometimes you don't feel like selling to someone. But listen, at the end of the day, you got rent due, you got to pay more, pay mortgage, or you just got to have something to eat. If somebody said, I'm going to give you $50,000 and I need you to act like Beyonce, I'm going to drum up. I'm going to drum up. I'm literally, I'm literally going to go into whatever mode that I need to make sure that I'm acting like Beyonce. Well, likewise, going into sales, all you have, it's a performance. Think about some of your best salespeople. Think about your best salespeople. All they're doing is putting on an act. They're being the person that they need to be able to sell you that product. And so I know oftentimes a lot of artists, they go into like service, okay? Maybe serving at restaurants or something like that. But I'm like, gosh, you're exchanging time for money, which you don't have a whole lot of time, because I know that when an audition is due, you got to be in front of that camera. Nobody cares that you have to go to work or anything like that. However, if you were to start your own business, then that means that you're pretty flexible. You don't have to call in making sure that someone can cover your shift or anything like that. So I recommend that that artists, people inside of the industry, that they really think about going into sales, and especially if you like service, going into the financial service industry.
Okay, so let's talk about your business, for the actor who all of a sudden their ears got perked up. It's like,
Mhm.
what? So tell me about the financial industry. What got you to say, okay, I'm going to try this out and see if this is a fit?
My story was a little interesting. In 2007, my husband and I, we had amassed quite a bit of wealth. We had almost $1 million in the bank. We had a $5 million real estate portfolio, and we were doing really well. Like, you talk about balling, we could do whatever we wanted to do whenever we wanted to do it. Okay. Um, so we had purchased a really beautiful house in Atlanta, and then 2008 happened. And we all know what happened during that time. And those of you all that don't know, the housing bubble burst. And one of the biggest recessions happened. Okay. So we thought that we were fine because we had plenty of money. I had, a nice, healthy stock portfolio and plenty of real estate. However, that didn't sustain us well at all. And so I ended up losing everything, including the house that we lived in and all of the properties that we had. And I found myself digging through trash cans looking for newspaper clippings just so I can buy a can of tuna for a nickel. And it was really kind of bad during that time. And so I found myself going to look for a job. I was looking for jobs at places where I could have literally acquired just a couple of years ago, and it was humiliating. It was quite embarrassing, but nonetheless, I ended up finding a job where I was getting paid $10.25 an hour. I couldn't believe it. I really couldn't believe that people actually sit in one space, and in exchange, someone gives them $10 and a quarterback. Well, and actually, it wasn't $10.25; it was $7.38 at the end of the day after taxes were gone. But you got to do what you got to do, right? A person that I used to network with, they kept inviting me out to this hotel party and like, please come to my hotel meeting. Please come to my hotel meeting. Lydia, have you ever been invited to a hotel meeting? Yeah.
Many of
Uh-huh.
them.
And so I go to this hotel meeting, and I sit in the back right by the door so that I could dip out, because once they start talking to me about doTERRA oils or selling me Tupperware, I'm gone. Okay. And so, but what ended up happening, instead of me leaving, I actually started leaning in, because the person in the front of the room started talking to me about how you can use life insurance to grow your wealth, how you can use life insurance to protect your wealth, how you can use life insurance to leverage your wealth. And I'm sitting up here literally about to go crazy, because had I known what that person was talking about in the front of the room, I wouldn't have lost everything I had. And so at the end of the presentation, I went up to the guy and I said, listen here, whatever you're selling, I'm buying, but I also need the ability to share with other people. And that started 15 years ago. But I'm going to tell you that through the years, me acquiring that life insurance license and being able to, find myself coming off of that job, going into acting full time, and then also, having this license and working this business worked out really well for me.
In 2007, you and your
Hmm.
husband had amassed all this wealth.
Hmm.
So I'm sure everybody's thinking like I am. How the hell did you get that money, girl? How did you get it?
Exactly. Well, a couple of different things. So, one, I'm going to tell you, my parents did everything right. I feel they did everything right. So shout out to my parents. They've been married now for 53 years. I'm so proud to be their daughter, and just some of the small things that they did to make sure that my brother and I were very well taken care of. They did that. But my father retired from the phone company, and when he retired from the phone company, he had given us quite a bit of money for us to be able to go and invest and stuff like that. So my husband and I, we had made some really good investment decisions. And we had bought some properties, sold some properties, and got into different business ventures that had paid off really, really well. And so, because we were young, though, we were late 20s, early 30s when this happened, and we didn't have a whole lot of financial education at all. But we did, again, what was said in the, you know, that they kind of taught us in school, like, invest in stocks and buy real estate, but they didn't really tell us how to do it. All I knew is that I was supposed to buy low and sell high, and that's basically what we did to get that money. And then again, in Atlanta, at that time when we moved to Atlanta, you could buy properties for $3,000. So we would buy them for $3,000. I remember one of the properties that we bought, when we walked in, there was blood splattered all on the walls. Somebody had been murdered in this place, but we had got it for super cheap. We cleaned that thing up. We ended up selling it for, 10 times the price. So it was that. It was just a lot of those, really small things during a really good time.
When did you start acting?
I started acting in high school. I was acting for a really long time. The arts was just always something that was a part of me. I was already, first of all, I'm already super dramatic in the first place, But I remember my first school play. My first school play was the 12 Angry Men, and I was the juror. It was a significant role, but I loved being introduced to that in the first place was so, so good. So that's when I started acting. And then after that, I started doing a lot of commercial acting and stuff like that. And then when I got back, when we got into this investing and stuff like that, first of all, when you're making really good money, you put that acting thing to the side because you're making good money, at least for me. Okay. It was like, I don't have to go through all this auditioning thing. I could put that thing on the shelf. And so, which is what's happening right now, actually. But I'm making really good money in this space, and I told my agent, I was like, I'll be back. I'm just taking a small break. It's been 3 years now, but no, it's like 2 years now. Yes, so that's when I started.
So now you heard this man at this hotel meeting who told you he was going to show you how to build wealth. Can you tell us what the purpose, first of all, of insurance is?
There's several different purposes of insurance. So insurance can be used as income replacement. So when a loved one passes away, and let's just say that, they contributed to your well-being, like for example, if my husband were to pass away today, he funds this thing, you know what I'm saying? So if he were to pass away, then my lifestyle would be completely different if he didn't have life insurance, but he does, thankfully. And so if he were to pass away, then that means that my lifestyle would be able to continue on while I have a big hole in my heart, obviously, and definitely would need to move on. And I may need money just to be able to go to counseling to just be able to get over the grief of losing him. So that's another reason why someone would want life insurance, just simply because for grief recovery and income replacement. But you also can use life insurance for protecting your wealth and growing your wealth and leveraging it. Let me explain what I mean by that. When you put your money inside of a life insurance contract, you're protecting it from a volatile market. So one of the things that I also do is I love stocks. So I like putting money inside of the stock market. Okay. Now, if any of my stocks happen to grow, right? Let's just say Tesla increased by 20%. Okay. Let's just say Tesla increased by 20%. Lydia, I'm selling. I'm selling. Um, because all of the shares that I have, I might keep a couple, but for the most part, I am selling. Well, if I sell, I already know that the market is going to correct. That was a fluke for it to go up to 20% because it's going to fall back down. But in the meantime, where do I take that money that I just earned from selling those stocks? I put it inside of a life insurance contract. Because if I put it inside of a life insurance contract, I won't lose money due to market volatility. The money is safe. And then also the money will grow. And when it grows tax free so that I don't have to pay additional taxes on the growth. And then also it grows at a great rate of return. Over the last 30 years, money grown inside of a of a life insurance contract has averaged 9.32%. And so that's a great place for your money to sit while you're waiting for the market to go back down and correct itself. Now, when the market does go back down, right, and I can buy a Tesla for cheap again, I'll borrow that money from my life insurance contract and I'll purchase more shares of Tesla. So that's one way where you can leverage and protect your wealth. And then let's talk about paying off your debt or paying off a house. I want people to completely stop. I get really frustrated when I hear people putting more money onto their mortgage. Don't do that. Do not make extra payments onto your mortgage. Instead, put that money inside of a life insurance contract. And there are ways that you can leverage that life insurance to help you pay down that 30-year mortgage way quicker. Ask me how I know. I did it. My husband and I, we paid off the home that we live in, well, in the States, not here in Dubai, but in the States, we paid it off in 3 years.
There was a video on Waka Flocka that he went to some insurance meeting at a hotel and he heard how he could make a lot of money, and then he took his $3 million, put it in that, and lost $5 million. In talking about building wealth, what is the smart way to do it? Because obviously they did not give him all the information he needed, set him up in the right way. He
Right.
heard life insurance is the way to go. I can use it as a bank. I can get what I want. It seems to me if you lose $5 million, there's a lot of penalties that he was not informed about. So walk us through the process of how do you start with a life insurance policy that you can build wealth, and what are those called? Let's start with that, because not all life insurance policies give you that ability. I can't take it from my insurance policy. I don't think I can take it from my SAG life insurance policy.
Right, right. Exactly. No, that's correct. So, here's the part that is really unfortunate about what he experienced. What I tell people all the time is cash value life insurance policies can be one of the best policies that you've ever had in your life, but it can be one of the worst policies you've ever had in your life as well if they're not structured properly and funded properly. So what I mean by that is this, is that the advisor, so someone like myself, an advisor needs to make sure that they actually know how to write these type of policies. If you don't, then you will find yourself like, with Waka Flocka, where he lost. I'm not really sure exactly how he lost that money. And then also you have to fund it properly. So the advisor has a responsibility, but also the client has a responsibility on making sure that the policy is funded correctly. Now, there's two types of cash value life insurance policies. Well, there's several, but your more popular ones are a whole life. So you can use a whole life policy to do this, or you can also do what's called an IUL, or an index universal life policy. Those are the two most popular ways of being able to build wealth inside of a life insurance contract. Those are the two right there. You can also do it with a VUL, but the VUL is a little bit more volatile, but the whole life and the IUL are the most popular.
I get a whole life policy or IUL, and
Mhm.
then how long do I have to put money in before I can start using it to pay off a college loan or to pay off a house loan, and then pay that money back to my insurance policy?
I'm going to say this, and I know people get annoyed by that, but it depends. So it depends really on your situation, but let me give you an overview or a high level situation. In most of these contracts, you can actually have access to your money in as little as 30 days. That's what makes these so attractive to some people, because you can have access to your money within 30 days. However, the life insurance companies, they do like longevity. Okay. Who wouldn't? You know what I'm saying? You put money inside of a contract and you take money right back out. This thing isn't magic. You know what I'm saying? It's life insurance. They are not in the business of just giving away money. No, they are a for-profit institution. Okay. So do understand that if you're taking that money immediately out, there are some disadvantages that aren't there if you kept your money in there for a while. Me, because of the type of investor that I am, I'm a long-term investor. I don't look for anything to happen, I should say, for my investments. I don't look for my investments to be an overnight thing. I know that it takes time. And so, with that being the case, it's always better that if you could at least wait a year to borrow from your funds. Now, the beauty about borrowing from a cash value life insurance policy is because when you actually borrow the money, it's as though you never took any money out the policy in the first place. So let me give you an example. If there were $50,000 sitting inside of your life insurance policy, and you were to go and borrow, let's say 40,000, okay, because you wanted to put it inside of an income producing asset, let's just say, because let's think about it, you guys. There's something that's called opportunity cost. I don't want you to just borrow money from a life insurance contract and go buy something stupid. That doesn't make sense. The opportunity cost doesn't make any sense, okay? You want to be able to leverage where you borrow the money, put it into an income producing asset like a business, like real estate, betting on yourself, something that's going to make you more money. And so when you do that, the money is still earning money inside that policy. So it's literally like you're using the same dollar twice. It's earning money over here and it's earning money over here. This is the reason why the wealthy love these policies.
Going back to, because so many people have huge tuition bills, would
Hmm.
and you have that type of insurance policy, the cash value insurance policy, would it be smart to then take out money to pay your tuition bill, or is that not considered a opportunity cost?
In my opinion, I don't think that the opportunity cost is there. Here's the reason why. Typically, for a student loan's interest, well, we're looking at what interest rate do we have on a student loan? Let's just say it's 7%. That's relatively low, okay, in the grand scheme of things. In the grand scheme of things, especially because of the way the laws are set up right now, where whatever you say you're paying is what actually goes into your debt income ratio when you're going to purchase a home. And so paying down a student loan debt isn't high on the priority list. It's not high on the priority list at all. Paying off a student loan, paying off a house, those things are not high priority. What's high priority is your debt, is your credit card debt, those high interest credit cards. Now, do we want to get those down? Absolutely, 100%. But that student loan, let that student loan rock out, and let's find alternative ways to be able to earn money so that we can come up with a strategy to pay that one off.
I'm looking at that cash policy insurance, that cash value policy. I'm looking at that,
Mhm.
and I'm going, I could set up a little business, have a little kiosk in the strip mall, and sell some stuff to get income coming in. With
Mhm.
that, then, but I need the investment money. I need to be
Yeah.
able, let's say it's 20 grand. I need that 20 grand in order to invest in the merchandise and the spot, and maybe give me a 3 to 4 month cushion to grow that business. Would that
Mhm.
be considered an opportunity cost?
It would. It 100% would. You know, betting on yourself is always a good investment if it makes sense. If it, you know, is the clientele there? Is this a market where you know you can thrive in? Being able to think it all the way through. Now, if you're in the middle of, if you're trying to sell uh ice and hail, you know what I'm saying? Like that might not be that might not be a good, you know what I'm saying? Like I want you to really think this through. Does this make
Okay.
sense?
I'm going to give you another scenario. I'm an
Okay.
actor. I've written a one person show. It's done well in venues, and now I want to put it up in an off-Broadway house. It's going to
Hmm.
run me about 80 grand to
Okay.
have, let's say, a 6-week run, be able to afford the venue, the publicist, stage manager, sound and light person. It's going to run me about
Mhm.
80 grand. Would that be considered investing in myself?
It would 100%. And let me tell you, this is why this is so good. Oh my gosh, this is the reason why this is so good. Because even if you took a loss, let's just say you took a loss and you made, I don't want to say no money, but let's just say even if you broke even or you did take a loss, let's say it cost you $80,000, you took a $20,000 loss. Okay. The
Mm-hmm.
money is still inside the policy growing and earning. You know what I'm saying? So that's the part, that's the reason why having these type of policies really allow you to be able to take risk that you wouldn't ordinarily do. However, if you took that same $80,000, okay, let's just say you had saved it up, or, maybe it was you inherited it, or whatever the case may be. And it was, you pulled it outside of your checking account or your savings account, and you invested it inside of you, inside of putting on this production, okay? You ended up losing, okay, $20,000. There's nothing working for you. There's absolutely nothing still working for you. That money is gone. It's lost. You're not going to get it back. However, if you pulled it and you borrowed it from yourself, from your life insurance contract, if you were to lose it, that's okay. It's still earning money.
I've pulled the money. How am I earning money? How is it working for me? And when do I start paying back that $80,000 loan to my insurance policy?
The reason why is because you didn't actually borrow it from yourself, borrowed it from the insurance company. Okay. So if the insurance company sees that you have $100,000 in there, okay, and again, they're using that $80,000. We're talking about 80,000. They're using that $80,000 as collateral against the policy. Okay. And so, yeah, we'll let you borrow this $80,000 as a loan. Okay. Because you're not withdrawing it from yourself, because you want to make sure you still have that $100,000. Okay. But I'm going to borrow the 80,000 from the insurance company. And so the insurance company is going to charge you a small fee of 5% per year. Listen, where can you get a 5% loan from where it isn't contingent on your credit score? It's not contingent on whether or not you have a job. Because listen, as artists, we struggle with being able to prove that we got income. Okay. So again, this is a great place to be able for you to be able to go to be able to get a loan. Okay. And so now you pull this loan, this 80,000 is collateralized against the death benefit. So you ask about, when do you have to pay it back? Technically, you don't. Technically, you don't. I do recommend to my clients, though, try to pay it back if you can. A little bit here, a little bit there, only because you'll earn more money if you pay it back. But if you never pay it back, that's okay too. because again, the $80,000 is collateralized against the death benefit. So if you happen to pass away prematurely, then let's just say the death benefit was, you know, 200,000, you borrowed 80,000, that means that your family is going to get 120,000 versus the whole 200,000.
When I am going to shop around for that cash value life insurance policy, what
Mhm.
are the things I need to look out for?
Typically, shopping around for something like this, you're not looking for a particular company. Okay, you're not looking for a particular life insurance company because I'm gonna tell you, most of these companies do some of the same things. Okay, they may have different indices that perform different, slightly different or something like that. But my mentor says this all the time, and I love this analogy. He talks about the swing or the club. Would you rather have Tiger Woods swing, or would you rather have his clubs? Let me ask you, Lydia, which one would you rather
I
have?
want his swing. I want his
His
swing.
swing.
I
You would
want his
rather his
swing.
swing. Exactly. The club is irrelevant. It's irrelevant. So, likewise, the advisor that you work with is the swing. The person that can actually properly structure this policy is what's most important, not the actual insurance company. That's the club. That's the tool. Okay. And so what you're looking for is one, somebody that actually owns one of these policies themselves. Okay. Two, that it's very difficult for a everyday person to know whether or not a person is actually structuring the policy correctly. But one of the ways that I can tell you this is do you have cash value available in the first year? If you don't have cash value available in the first year, run. Here's the reason why. Us as advisors, we don't get paid a whole lot of money to write these type of policies. I kid you not. It's not one of the most profitable type of policies to write because the whole idea is for you to have the least amount of life insurance so that you can have the max amount of cash value. So, what typically we get paid off the cost of insurance, not how much cash value you're putting in there. And so, when I structure a policy and a person wants to put, a ton of money in there, I'm not going to inflate this policy. Again, I'm going to put and give you as little bit of insurance as the law allows so that you can grow more cash. But there's a lot of agents that do it in reverse. They want to inflate the life insurance policy, the life insurance amount, okay, so that they can get a bigger commission check. That part is unfortunate. That part is really unfortunate. And so you're just looking
So,
for someone that has credibility, someone that has written these policies before, someone who's not thirsty.
so let me ask you, going back to Waka Flocka, because I that conversation distressed me when I heard about it. That he thought putting his money into a life insurance policy was the best thing for him, and and I am wondering if because every now and then an actor hits the jackpot, or they might even hit the lotto. Let's say they get $3 million, or even if they got $70,000. But that was, it was like, okay, I have all this money. I just heard Waka Flocka put his money into a life policy, a life insurance policy. I'm gonna do the same thing. Why would I put that kind of money into a life insurance policy? That because my first question is, why am I going to put that money in there? What the hell is that for? It doesn't make sense to me. So can you break it down for me? The right, first of all, the wrong thing and then give me the right.
You saying that made me think about something that you asked earlier that I didn't finish answering, but about how long to keep your money in there. So you can do a long term contract, which it covers spans your entire life. Or I have so I own six of these policies. Two of my policies I'm paying for 5 years, and then the other four I'm paying for pretty much probably my entire life. But to answer your question in this way, especially if a person gets a windfall, one of the things that I would have done with Waka Flocka is this. As an artist, when we come into a windfall, one of the things we have to make sure is that what does our future look like? Do I have money when I stop working? What does my retirement look like? And so a portion of his money actually needed to be annuitized. Let me explain. An annuity is a single premium contract where the money is put away inside of a policy. And let's just say it's pretty much locked up from anywhere from 5 to 10 years. Okay. But an annuity has a great rate of return. But the beautiful part about an annuity is that it gives you guaranteed income for life. As an actor, that literally should like ring off bells to you, because you aren't going to work for the rest of your life and you need a retirement strategy. And so why Waka Flocka would do something like that, let's hope that he would be doing it for the purposes of a retirement strategy. At least that's what a lot of the artists should do. Now, what I'm guessing probably happened in his case, and what I want to warn anybody that has a mass amount of money to be able to do is what, again, dealing with people that don't know how to structure these properly, there's something that's called front load. And so an advisor gets super excited and they want you to front load this policy with all of the money you just got. So let's just say you got a windfall of, you know, $50,000. They're going to say, okay, put all of that $50,000 inside of this life insurance contract. Well, when you do that, first of all, again, remember that life insurance policy, the life insurance itself is going to be really big because you're trying to put in all of this cash, right? But what happens the second year? This is why he probably lost money, because you cannot stick a bunch of money into the policy in the first year if you don't have money to put in every single year, at least for the next 5 years.
Is it the same amount of money? Let's say you put 50,000 the first year. You have to put 50,000 the second year. Is that how that works?
I want you to know that I'm answering this generally before any advisors come after me, because I can tell you this. I'm going to say it doesn't have to be exactly that same amount, but for the policy to perform at its optimal, yes, it should. That's what we call a max funded life insurance policy. When we max fund a policy, we're paying typically the same amount every year over the next 3 to 5 years, or 3 to 6 years, depending on age. Okay. And so, but again, if you dump all of this money into the first year and the person can't pay the second, third, and fourth year, they have just lost that money, because they're literally paying for life insurance they can no longer afford. It doesn't make sense anymore. So that's probably what happened to him. And that's what happens to a lot of people. But yeah, you would want to definitely open up a life insurance policy and put some money inside of it, because what you're doing is you're securing your retirement for later. This is your retirement policy as well as your investment policy.
Those 5, 6 years, you are putting money in, and then you get to see it when you are in your retirement age, 65, 70. Is that how it works? that you can pull from it then?
Well, the beautiful part is that you can pull from it at any time. But I wanted to bring up an annuity because you brought up a really good point, because I work with a lot of personal injury attorneys, okay, where their clients end up getting a large sum of money, okay, all at one time. These people are not used to this kind of money. So it's like people that are not used to a lot of money, you need to get that money out of their hands as quickly as possible, as quickly as possible, which is another reason why, if somebody comes into a windfall, that they probably should put their money, one, either in an annuity or into a cash value life insurance policy, because they just got to get it from out of the bank. They need to give this money some sort of direction, something to do, especially for if it's something that's not happening over and over and over again, you're liable to lose it. And so we want to be able to grow it responsibly. And so to answer your question about putting that money in over the next 5 to 6 years, every single year, that means that you actually can access that money in the first year, like I mentioned before. It's just that depending on your strategy, you may not want to touch it before then, but certainly you're welcome to.
I actually had some actors send me some questions, so I'm going to read it because I want to make sure I want to say the question right. The
Okay.
first question, and this is from Rashim Lee. He was eager to give you some questions. So the
Okay.
first question is, what is the best way to get startup business lending?
The best way to get startup business lending is to establish yourself as a business. That's the best way, is to start yourself as a business. I feel more and more people are getting accustomed to it or being introduced to it, which is business funding. Okay. And so being able to establish yourself as a business, because we are, right, as artists. And so establish an LLC, uh, create some accounts so that you can get established and with some credit within your business, right? And so then being able to just get small credit cards here and there. Maybe you might be able to get a gas card, or something like that. Or I know American Express is really good at giving out business credit cards, but I would do something like that and establish some business credit.
So once I get the LLC, then I'm going to apply for some low credit cards, a gas
Hmm.
card, maybe a small business card.
Yeah,
Okay,
small
all right.
business card. Mhm.
And something that you pay up right away, like because I think
Exactly.
American Express, you got to pay it right away, or they will
You
they
gotta
will
pay that
hurt
right
you.
away. But
They will
right,
hurt you.
exactly. You gotta pay that right away. But something where, like, maybe like an Office Max, or something like that, where you're buying something small, paying it back. But listen, I don't care if it's something small or if it's something big. I don't want anybody using any type of credit that they can't pay back immediately. If you don't have a plan to be able to pay that money back, I wouldn't get the money in the first place. I I would really want you to sit down and consider, what is my income strategy? What's my strategy for being able to have cash flow, period? Because getting credit is not, it's not your alternative or your answer to cash flow. You still have to answer the cash flow problem.
The next question he has is, how and what should I invest in to grow my money?
It's such a broad question, okay? But because I'm not your advisor, okay, I'm going to be very, very general because I don't know your situation, okay? There are some people that they may not be in the position yet to get a cash value life insurance policy. Here's the reason why. Not everybody, I feel there are some people that are like, everybody needs to get one of these. I believe everyone needs to get life insurance, period. Period. Lydia, let me tell you, I'm going to tell you a secret. I'm not going to tell everybody, but I'm just going to tell you this secret. Okay. But everybody's going to die at some point. None of us are getting
Yes,
out of
ma'am.
here alive. None of us are getting out of here alive. You would think that that was some sort of secret or something, because people walk around thinking that they are immortal, but they're not. Okay, but everybody needs some sort of a life insurance policy. But to go back to answering his question, um, you may want to just start with a high yield savings account. That might be a great place for you to be able to grow your wealth. It may be. Now, I'm not a fan of them, just simply because of the fact that it doesn't have a good tax advantage. What I mean by that is this. With a high yield savings account, you are putting already tax dollars into a vehicle that's going to grow your wealth, let's just say at 5%. Let's just say at 5%. That's a good rate of return, 5%. Okay. You earn money, you earn 5%, but then you're taxed on the growth. What? Somebody double dipping. Wait a minute. I already paid taxes on this money. I'm putting it in a vehicle. It now grows, and now I have to be taxed on the growth. I don't like that. Not one bit. Not one bit, which is the reason why a cash value life insurance contract is so attractive, because you put already taxed dollars into this vehicle, and when it grows tax free, which is the reason why banks and corporations have billions of dollars in life insurance contracts, because they don't want, when their money grows, for it to be taxed. So we talked about a high yield savings account. Okay. Another place that you may want to be able to put your money is a Roth IRA. That's also an option. Here's the issue with the Roth IRA, though. It's a great place to be able to grow your money, for your money to earn at a compounded rate, okay? Because you can earn compound interest with a Roth IRA. The only issue is that the stipulations that come with it. What I mean by that, you can't access it until you're 59 and a half, or it has to stay in the account for at least 5 years. And then also, there's no liquidity, so you can't access it without penalty, which also makes the cash value life insurance contract so attractive, because you have liquidity. You can get your money whenever. It's not based on age or anything like that. So that's where I would suggest, and then just buy. I'm gonna be honest with you. Buy some crypto. Buy some crypto. Crypto is kind of low right now. Buy some crypto and hold on to it. But what I don't want you to look at is, and also, I mean, real estate as well. But what I don't want you to do is look for something to invest in that you can get rich quick. That's where a lot of us find ourselves getting into trouble. I found myself there. I've lost at least $10,000 investing in something where I thought I can get rich quick. Investing takes time.
That brings up a great point, and I've seen actors do this. They have put their money into the stock market. They have, I can't speak about life insurance, but they've put their money in certain things, thinking that
Hmm.
it's going to get them wealthy. That they got a hot tip, they got a hot lead, they put their money in, and then they lost all the money. The whole concept of get rich quick, actors and creative people, we are
Hmm.
probably the most susceptible on that get rich quick thing. It's like, I'm
Yep.
gonna be an actor, I'm gonna be rich, I'm gonna be famous, and it's like, no, it's you got to look at it like a marathon, it's not a sprint.
Yep.
So can't say it too much, you have to say it over and over again. But you have some well, I know a few actors who have been very, very frugal and diligent, and they take their money and then they put them in these into the stock market, thinking it's going to help them. When you were talking about the 2008 um, uh, bubble, of the housing bubble, I know an actor who lived so frugally and had all his assets in these stocks,
Yeah.
and he lost everything. He lost everything, had to start from scratch. And this was a guy that was, it wasn't, he had figured out how to live under his means as an actor,
Mhm.
go out on auditions, do his jobs, and not squander any of his money. And he was a working actor. It wasn't like he was a name. He was just fortunate in that he would get voiceover work, or he would get this job. So he didn't have to take on a day job. But the 2008 bubble, housing bubble, changed that for him. and
Yeah.
and so when you talk about the get rich quick things, because that's how they get you at those hotel
Yep.
meetings. You're gonna get
Yep.
rich. I remember Amway years ago. I mean, I went to all these meetings when I was in my 20s because I was like, yeah, that'll help me. Yeah. And then you get in there, you pay down your fee, your entrance fee to buy the kit, whatever it is, and then you start to learn, first of all, it's not a get rich quick thing. Secondly, if it's a business where you have to bring other people under
Mhm.
you in order to make money. You're not going to make money by yourself in these businesses. It's all, I don't want to say it's a pyramid scheme, but it is a pyramid in that you amass money, the more people you get under you, and then those people get under them, and those people get under them, and then you start to build your finances. But you by yourself, getting into these programs, into these different uh, uh, companies, will not get you rich quick. uh,
Mm.
the last one I did, the last one I did was Amway. I did quite a few of them, but the last one I did was Amway, when I want to say I made 200 and maybe $87, half of which I made through my church because I sold them paper goods. And then I was so excited. I sold these paper goods, and then the secretary called me. She said, "You know what? They don't work. I want a refund." I had to give her the refund. It didn't come from Amway. It came from me. I was like, I don't even have the money to give. I had to borrow the money to give back to the church because Amway has a wonderful return policy. We'll just take it back and give you your money. But what they don't tell you is it's the seller who has to give them back the money, not Amway. You lost it. So I learned the hard way. There are no get rich quick schemes. You got to love what you do and do what you love, so that if you only make $10 and a quarter in an hour, you are happy because you made that $10 and a quarter. But don't take on any, don't listen to people when it comes to, hey, you sell this product and it will make you rich. No, it doesn't work like that. So I just wanted to throw that out there. I'm gonna ask the other question. He's got a couple more. So what does a 10-year retirement strategy look like?
Listen, Rashim, you are talking my language, and I wish that this was a language that more artists spoke about, which is retirement and having a retirement strategy. We're just in the grind of now, right? Where we aren't planners for the future. And at some point, we can't work anymore, or we don't want to work anymore. Let's say that. I would rather get to the point where I don't want to work anymore versus get to the point where I can't work anymore. Okay. And being able to make that decision for myself, but that takes work. That takes a level of discipline of being able to put your money someplace that is going to be safe. Again, I'm going to bring these four up again, I don't remember if I mentioned it already, but if I have, I apologize. But if I haven't, I'm going to break it down for you again. If you're looking to do a 10-year strategy, remember there is no get rich quick, but we can mitigate our losses by putting our money someplace that is one, safe. Okay. It's safe. Now, I want you to think about some options. I have a lot of investors that I work with where they are real estate investors. Okay. They love their real estate. Now, mind you, I love real estate as well. I'm a domestic, I'm a domestic investor as well as an international investor. But my money is not always safe inside of real estate. 2008 taught us that. The second thing is I want you to think about the rate of return. Okay, whatever I put my money in, what's the rate of return in it? Now, I want you to think about, again, real estate. A lot of people say, oh, well, I'm just going to have this real estate. I'll have a bunch of equity inside of my home or inside of these properties. Listen, equity has no rate of return. I think that's worth repeating. There is no rate of return on equity. None. Again, 2008 taught us that. You can I regret paying my house off. I completely regret paying my house off. Why? Because I dumped $52,000 for 3 years into paying off this house. And now all of this money was stuck in four walls. And I had to have a good credit score to get out my money. And I had to prove that I had the income to be able to borrow the money out of my house. So having my money stuck inside of a property is foolish. Okay, so we talked about safety. We talked about a good rate of return. Let's also talk about taxes. What's a good place where my money is going to grow, where it's going to be taxed in an advantage type of way? Okay, I don't want to defer my taxes like a 401k. I don't want to do that because if you defer your taxes, more than likely taxes are going to go up in the future. They're going to go up. Somebody has to pay this debt. And so, why would I want to defer my taxes for a later event when I don't know what the tax rate is going to be? I tell people all the time, I'd rather dance with the devil that I know than the devil that I don't know. I know what this devil is. It's my tax bracket is 32%. Ugh. But it is 32%. However, I believe it was 1940, the federal tax rate was 94%, y'all. 94%. And if you think we can't get there again, you're wrong. So, tax advantage. And then the last one is liquid. Is my money liquid? Can I get to it easily? So, to answer your question on a 10-year strategy, I would defer to cash value life insurance. It's the only place right now where you can put in a good amount of money. And if you just let it sit there for a good 10 years, it would grow at a decent rate of return.
Okay, you just said something that triggered me real quick, and that is, you were talking about how high the taxes were at, at a certain period, and I thought about the depression. During the depression, everybody lost everything. How did it affect the insurance companies?
It didn't. It didn't. That's the beautiful part. It affected all of these, stock companies and, all of these people's portfolios. However, those people that had their money in insurance, they lost nothing. Here's the difference between what insurance companies do than what some of these other portfolios do. Insurance companies, they invest in options. So what they do is they make money when the market goes up and they make money when the market goes down. So the fact that the market went down, they still made a ton of money. When the market goes up, they make a ton of money. And so their index strategies make it very, very makes it very good for someone to be able to invest in them. And insurance companies are required to have more liquid funds than a bank has to. So your
Oh,
money is a lot more safer.
who should I be building relationships with in the financial industry?
One, a CPA, a good CPA. And what I mean by a good CPA, I don't want you to just talk to somebody that does taxes. I do taxes, just like going to somebody that, oh, I do hair. No, sis, if you're not a stylist, I don't want somebody to just do hair in that kitchen. You know what I'm saying? Um, or somebody that just does taxes because they learned something from somebody. No, somebody that this is what they do. They study this thing. They know how to get creative with it. They are a strategist. That's the reason why I call myself a financial strategist or a wealth strategist, because I don't call myself an insurance agent. An insurance agent exchanges and says, okay, how much can you afford? Or, you want this life insurance policy? I'll give you this life insurance policy. No, when you sit down and you talk to me, I need to know, man, where did you come from? Where are you trying to go? I do a whole be, do, have method on my clients. Who do you want to be? What do you want to have? What do you want to do? Because that's going to help me to really determine what product you need to be in. That's the reason why sometimes it's hard for me to exactly answer a question outright, because there is no one size fits all for anyone. It really does depend on your lifestyle, who you are, who do you desire to be, what do you desire to have. And so yeah, so that's the tricky part there.
What do I invest in?
Again, this is all for entertainment purposes only, because I am not your don't get me in trouble. So listen, the reason why I have to keep saying that is because I am a licensed professional. And so we can get in a lot of trouble with just giving financial advice to, people that are not our clients, right? I'm not your fiduciary in this moment. So I just want to make sure that's clear. But again, some things for you to look at investing in. One thing I can tell you is that life insurance is not considered an investment. We cannot call life insurance an investment. Okay. While I think you should get life insurance and you should put some money inside of life insurance to be able to grow it and protect it and leverage it. But outside of that, I do really do think that you should look at getting some crypto. Now, I know that there's some controversy around that, but I just really don't think it's going anywhere. But I don't want you to look at it as a get rich quick scheme. I thankfully was an early adopter into crypto. So my crypto portfolio is nice. Um, but I refuse to pull from it. I refuse to pull from it because I feel like it has a really long way to go. And so I would do what's called dollar. This is what I do. And I can see you doing that, is to do what's called dollar cost average. Every single week, I take $20 and I invest it into crypto. It pulls out of my account every single week. Well, what that does is, for dollar cost average, it means that sometimes I may purchase high, sometimes I may purchase low, but it always ends up averaging out because I don't want to have to time the market. I don't think that I have that ability. I don't have a crystal ball that tells me, it's going to be low today or it's going to be high today. Okay. So I do dollar cost average. So I would do that. But I would also, for right now, I would get your money out of just being in a bank account. And again, even if you have to put it in a high yield savings account for right now, because you might not have a lot of money, I would at least do that, because every day your money is sitting in a bank account, it's losing value. Why? Because it can't keep up with the cost of inflation. And at least if it's sitting in a high yield savings account, it can keep up with the cost of inflation.
How can actors make the most of their union benefits to support their financial goals?
Budget. Same budget. I don't think we talked about budgeting nearly enough. Nearly enough. Being able to pay yourself first. So I want you to think about budgeting, okay, in a way where how you divide up your money. 10% of the money needs to go to you paying yourself first. The next 10% needs to go to you giving it away. The other 10% needs to go to you investing it to somewhere else. So 30% of your money should be gone before you even touch it. You know what I'm saying? Before it even comes to your hands. And then the other
Mhm.
70% you can live off of. But and then you don't want your housing though to be more than 30%.
Which is not possible right now in the market as it is.
Yeah.
Uh, Most people are lucky if they have three roommates instead of five to pay for their shelter. But I just
Yeah.
want to hit the first 30% again. So you pay yourself 10% when you get paid. You pay your tithe or you give it to a charity. And then
Mhm.
the third 10% you invest in, and
Mhm.
that is part of your budget, that you make that part of your monthly budget. And you want to get to the place where your living is only 30%, no more than 30% of what you make. You want to get
Yes.
there. That's
You
the
want to
goal.
get there.
Okay.
That's the goal.
Okay.
But I do want to say this too, though. But how we get to this goal is just by increasing our cash flow. It may not necessarily be downsizing, but increasing our cash flow could be one of those.
And that goes back to how we started the conversation. How do actors make money to
Hmm.
support themselves while they're pursuing their career? That
Hmm.
they have to have other means of income in order to be able to pursue their career without panicking, without going into bankruptcy, without
Yeah.
taking out a bunch of credit cards that they don't know how they're going to pay off, which is what I
Yeah.
did. I thought, hey, money's coming. I'll just use my credit card. And that I ended up using the credit card at a very one credit card, which was my Amex, which is how I know about Amex coming for you. And there was a very swank store in West Hollywood called Chateau something or another, and they were the only ones at that time that took credit cards. This is how long it's been. They were the only person that took credit cards. So I would have to get all these artsy fartsy little food items to live. It wasn't even like regular, like going to the grocery store and getting a piece of ham. No, I had to get prosciutto. Or I had to get, it's like, okay, I don't know what I'm gonna make with that, but that's what I'm getting. So anyway, so I just think it's important for actors to. I love the budgeting. My book, which is right behind me, it's a planner for actors. Is called Acting Smarter. My Acting Smarter planner, and in it I have uh, where you can budget every month so that you understand what budgeting is, how important it is to the actor more than any other person. I think budgeting for the creatives is extremely important, especially if you go from feast to famine. You got to have that budget. And I've learned that from the actors who are doing well now, that I remember back in the day how frugal they were, how very conscientious they were about where am I spending my money. I don't know if I'm going to get a job, another job this year. So can I make it on the money that I have? And that is including unemployment. If I was lucky enough to get unemployment, can I
Yeah.
make ends meet without freaking out or without having
Yeah.
to take another job? And if I take another job, is it something that I love? So I'm not hating the job and people in the job because I'm not doing my acting. I'm a big
Yeah.
believer in using your skill set to help you get side gigs or give yourself a little company that you're the boss. So you set the hours. If you're really good at editing, set up a little editing company for other
Yes.
actors that you do their reels, or if you're really good at organizing, organize for actors, or organize, get into one of those companies that, like, TaskRabbit. I don't know what they are outside of Los Angeles, but in Los Angeles we have TaskRabbit. So you can put yourself out there to make more than $10.25, so that you are
Mm-hmm.
making a good amount of money, and it is keeping you going while the acting jobs come. And I have to say this about acting, because it is the wild, wild west now in acting, where you have all these streamers, you have all these other companies, you
Yeah.
have the commercial
Competition.
field has become non-union. So those jobs that used to sustain you for 6 months or a year because it was a union job is now non-union. So they buy you out, which means you don't get any residuals, you don't get
Yep.
any perks, and they use it in perpetuity for life if they want to.
Yep.
And that's not helpful to the actors. So, being a union actor, I know the value of being union, and how that helps you with your finances. You don't, we only look at, and you had mentioned this earlier, that we're looking at right now, but we have to
Yep.
look at down the line. If you are a union actor, do not go FICOR to then take on a job that's not going to give you your benefits. The
Yep.
whole thing about being in the union as an actor is that they support you. They have your back. So if you don't get your check, they will go get you your check. You want to build your financial stuff so you can get your insurance, your wealth, your health insurance. You can get all those benefits that the union offers. But if you go,
Mm-hmm.
well, I really need to pay my bill right now, and so I'm gonna step out. No, you hurt the union. You not only hurt us, but you hurt yourself, because that's money you will never see. We have to, if we band together, we hold people accountable to do what is
Mm-hmm.
right. But if these companies keep going, I can get, I can get this great actor for $2. They're going to get that actor for $2. They're not going to come and say, you know what, we're going to give you a union contract. So it's really important that we protect ourselves financially. We protect the union that
Yeah.
serves us, because that's how we stay protected, and that we figure out how to use our skill set to make more money than $10 and a quarter an hour. And I think in some
Mm-hmm.
places you still can't even get $10 and a quarter an hour. So
And
how are your skill sets helping you while you are looking for the job?
this is what I want to say about that, because sometimes it's not even about your skill set. It can be about leveraging someone else's skill set. And so, what I mean by that is this: right now, probably many of you have heard of faceless YouTube channels. They're becoming more and more popular, okay? Where there's these YouTube channels, there's like this computer voice, and it's just giving you a bunch of information. And I found myself just locked in, mesmerized, just looking at these videos and getting this information. And then also you also have faceless Instagram pages where literally you don't even know who owns the Instagram page, but it just has a bunch of reels and has a bunch of these IG pages are literally monetized, and people are making a ton of money off of these pages. Well, the reason why I bring that up is because now more than ever, we're able to think of very creative things to do to be able to earn money. And those people have have made it where they don't have to be the face of something to still be able to make money, which is what I help people do. I help people grow and scale a six-figure faceless life insurance company. And so people are like, wait, a faceless life insurance company? Yeah, absolutely. So you don't have to be that person that sells life insurance where, you're sitting down in front of somebody and trying to sell them life insurance. No, you can create a system based off of a proven framework where if you just got a life insurance license and created this funnel for a person to be able to come in and purchase life insurance, that could be a great passive income for someone. That's the reason why I speak on cash flow and helping people to be able to get just some extra money coming inside, because we just needed to carry over, and also we have to be able to get that money for retirement.
So you have this company of how to build wealth.
Hmm.
If an actor is interested in doing that, are you someone that they could contact to say, "Hey, I think I'm interested. I think I'd like to work for you. What do I need to know? How do I approach you? What are you looking for?"
Yeah, I'm looking for people so the answer is yes. I'm somebody that they would come to. So I am an agency owner, a financial service agency owner, and right now I have about 56 agents or so. And I'm looking for in those people someone that is coachable, someone that doesn't come with a whole lot of excuses and, stuff like that, that are like, hey, I'm hungry, and can understand what their why is. I'm real big on understanding your why, because let's just say again, as a creative, right? My why is for me to ultimately be able to do the thing that I love to do, which is acting, okay? And be able to do that while still being able to have a decent lifestyle, while still be able to go out and travel and do all of these things before that one big break happens, or until that one big break happens. So someone that's like, okay, I'm going to do what it takes. I'm going to follow the system because I know what the real end goal is. That's what I'm looking for.
I will put your information in the description so they can reach out to you. You made a comment, and it's like not until your acting jobs come, but even when your acting jobs come, because as we know, being actors, acting jobs, uh they might come, they might not, they may come, you might have a season where you are landing roles. God bless you, let's pray it keeps going. But sometimes the season is short. You get one
Yeah.
job and then you don't work for a while. Sometimes you develop and people are wanting you. You have that special thing that all of a sudden everybody's interested in. Or
Yep.
you are able to do voiceover work and
Mhm.
do audiobooks and stuff like that, and that keeps you going. The Again, I want to just preface, the business has changed. When I started in the business, you could live as an extra, a union extra. You could make a living and buy a house. When I first came in the business, extras made
Wow.
good money. That is not the case anymore. Actors who got maybe 6, 7 jobs a year made enough money not to have to work. You got it
Wow.
on a ABC, CBS, NBC show, and you book 6 jobs. Well, during that cycle, that those TV shows repeated at least twice. So that meant you got
Mm.
your the full paycheck, then you got the full paycheck from the first residual, then you got another decent paycheck from the second residual. So that first year you did well. That the pay system has changed so much from When I started in the late 70s to today, you can be a series regular on a Netflix show and not make enough to pay your rent. So
Whoa.
you gotta think, yeah, they'll book you. You could, let's say you got 10 episodes. They can just take and shoot out your stuff in a week. So instead of getting the 10 episodes, if unless you are a big name, and you have a big
Yeah.
union, a big agency, you are getting paid scale plus 10, maybe a little bit more, but that's not going to uh take care of you for the year. It's not. And now people know who you are. Everybody's seeing you on TV, and the residuals you get from those streaming services are nothing like the residuals you get on a network show. So that the business model has changed for actors, and we
Mm.
have to be smart on how to make money. And that's something they don't teach you in acting school. That's not something they go, hey, you're working hard to get that, you're taking your classes, you're doing that, and you want to do all of that, but you have to find other ways to support yourself. So either you write your own shows, you make your own movies, you become very entrepreneurial in that sense, or you are going to drown in debt. And we don't want you to drown in debt. We don't want to drown in debt. And so please contact Shakey if you are interested in financial services, either to maybe consider working for her, or just to get some of the resources that she has that you might be able to get, or just get consultation that she could help you with your finances. So I am so excited. There's so much more I want to talk to you. We're gonna have to do this again. And let me tell you, I love that you are such a great example of somebody who is living their dream. You said, I'm going to Dubai. So tell us what took you to Dubai.
So there's a couple of things that took me here. One, so I started coming to Dubai every year for the last 4 years because my son, who plays professional ball, he was playing for a national team here, and so I would come and I would visit him, and I just fell in love with the place. Absolutely fell in love with it, and so my son ended up meeting a woman from here, and they got married. And so I was like, okay, well, that's cute, that's cool. But then, uh, but then they ended up getting married. I mean, not getting married, but they ended up getting pregnant, like maybe 6 months after they got married. And so anyway, I I was expecting my first grandchild, which she's here now. She's been here for a week now, but I knew that I want.
Congratulations,
Thank
Jima.
you. But I knew that I wanted to live here. One, because everyone here is entrepreneurial. Plus, when you look out and see this very young city, Dubai is an extremely young city. And to see what they've been able to create in such a short amount of time, it was very impressive to me. They have this structure, it's called the frame. If you guys ever make it to Dubai, you have to go to the frame. But there's these 10 kind of commandments that they live by. They're not commandments, but they're 10 pillars that they live by. But one of the pillars is competition. And I feel like where we are in America, we don't teach enough about competition. Matter of fact, we're always saying we need to collaborate over competition. And they're like, no, no, we compete. We are in competition with our brother. And that right there made so much sense to me because I feel like in our collaboration, it has made us average. It has made us soft. When the spirit of competition makes you better, it makes you, you know what I'm saying? Like
It sharpens you. It
it
sharpens you.
sharpens you.
If
It
it's healthy,
sharpens you.
if it's a healthy competition, it sharpens you. Yes. Yes.
100%. And so it's like, oh, if I'm trying to collaborate with everybody, listen, even the agents a part of my agency, they already know, listen, I want you to be better than me. Compete with me. Compete with me. You're not collaborating with me, you're competing with me. Because if you compete with me, that means that you can out earn me. And if you out earn me, then that means you're making a good amount of money. So that's the part that that brought me out here. And so now I'm living out here, obviously, very close to being it, to my grandbaby, so I can see her all the time. But also I bought property out here. And so now that I bought property out here, I just love it here. Now, you don't want to come in the summer like where right now it's just hot. It's just too damn hot. But, but but I love it here. Investing here is great because I get to earn my money tax free, which again I talk about is super important when growing your wealth. So yeah, I there's several different reasons, and just the modesty of it all. I love the way they dress. They're so fully clothed, but they wear these materials that are just gorgeous. Like, oh my gosh. So I just love everything about the culture.
Thank you so much for checking us out. Please leave us a comment, let us know what you think, and share this episode with your friends. And don't go anywhere, because just in case, you may want to know what the it factor is and how you can get it with our guest, Lauren Chatema.